In the video that follows, you're going to see some images and results from the Collective 2 website. I just want to remind you that everything you see, all of the results, all of the performance is hypothetical. Hypothetical results have certain inherent limitations, and you should be aware of those limitations. So what you can do is you can pause the video right now and read the text that's on your screen and make sure you understand the limitations of hypothetical results before proceeding.
Hi, this is Matthew Klein from Collective 2, and I have a very important question for you. Would your trading improve if you could build your own time machine? Of course it would. You know exactly what you'd do. You'd build your time machine, you'd get into it, you'd travel into the future, and you'd look at the stock prices of, Google or IBM or Microsoft. And then you would return to your own time and make a trade. You'd either buy or sell based on what you knew about the future, and you'd make a killing. Of course, there are a few problems with this. First, it's probably illegal, but more important, you would probably create some kind of time loop, and history would repeat itself over and over, and humanity as we know it would be doomed to a kind of sick, eternal hell and damnation, which is a bit of a downer, so I have a better idea. What if we could use time travel to create a Collective 2 portfolio that doesn't have any sort of hindsight bias? What do I mean by hindsight bias? Well, here's an example. Let's say you go to the Collective 2 website right now and you go to the leaderboard. The leaderboard is exactly what it sounds like. It is a list of the trading strategies that are in the lead and that have been performing well very recently. The first thing you probably say to yourself when you look at the leaderboard is, whoa, those trading strategies are really good. If only I had taken, say, the top 7 of those strategies and traded them in my real-life brokerage account, I'd be rolling in it. Some of you may understand immediately what's wrong with that kind of reasoning. But it is a really easy mistake to make, so let's examine it in some detail. Yes, it is true. Today is, I'm recording this on September 22nd. Now, if I had gone back to January and known which strategies would be on the leaderboard today, well, then everything would be simple.
Back in January, I would have invested in these strategies. And now, in September, I would be reaping the fruits of my prognostication.
Now, I should point out this isn't a problem solely with Collective 2. Hindsight bias affects all of the world of finance. It's a problem with mutual funds. You can look at the newspaper today and see the top 10 mutual funds that have performed well recently. And the natural temptation is to say, well, if I had only invested in those mutual funds 6 months ago, I'd be doing very well now. But that's the problem. The mutual funds that have performed well since January may not have been obvious to pick back in January. Same problem occurs with hedge funds. You can always find the top 10 hedge funds, and you can always say to yourself, well, all I need to do is pick the top 10 hedge funds. But of course, you need to pick them before they are the top 10 hedge funds.
Okay, so what are we going to do about it? Well, let's say you could move backwards in time and look at who was leading Collective 2 way back when. Let's say December 2015. That's a couple of years ago. What if you said to yourself back then, back in December of 2015, I'd like to pick the strategies on Collective 2 that meet certain mathematical criteria. Here's what I want. I want strategies that have the following metrics: a Sharpe ratio of, greater than 1 and a beta of less than 0.3.
Now look, if you don't know what the Sharpe ratio is or what beta means, don't worry about it. Those are just mathematical numbers that represent how a strategy has performed recently. What's important for the sake of our story is this.
Those are measurements about how a strategy has performed up until now. That's very interesting to know, but it doesn't quite tell you what you really want to know, which is, if I had picked those strategies which had performed well up until now using these measurements, then what? Then what would have happened? If I had moved forward in time, would it still have been a sensible way to choose strategies for my portfolio? And that is what the portfolio time machine on Collective 2 can help you establish. So let's go ahead and find the portfolio time machine. And remember, you have to be viewing the site as an investor. And then you can go to Discover Strategies. There's a couple of ways of discovering strategies on Collective 2. We've already seen the leaderboard. We've looked briefly at the grid. But what I want to show you right now is the portfolio time machine. So let's begin our time travel experiment. How do we start our time travel experiment? We simply move this time travel knob backwards and forwards. And let's go back in time to, I don't know, December 2015, about 2 years ago. Okay, let's remember the purpose of this experiment. The reason we're doing this experiment, this time travel experiment, is as follows. We want to know if we had gone back in time, if we were in 2015, and we found a set of strategies back then that were performing well on Collective 2, what would have happened to those strategies in the future? We're not going to pick those strategies that are doing well today in 2017. That's easy. We know which strategies are doing well in 2017 because that's already happened. What we want to do is go backwards in time to 2015 and pick strategies that we would have picked back then based on how they had performed up until that period. And then we want to see what would happen to those strategies going forward in time if we had selected them in 2015. Okay, so let's go back in time. It's December 2015. And back in December of 2015, let's select some strategies that were performing well back in December. They have a Sharpe ratio of greater than 1 and a beta of less than 0.3. Now, which strategies were performing well at that time? And indeed, you can see, if you look at the chart, leading up to December 2015, the strategies that had these excellent performance criteria were performing well as a portfolio. That's not what we care about. What we want to know now is if we were to use this mathematical filter to select strategies at any given point in time, what would happen moving forward into the future? So let's use our time machine right now and move forward in time. The way you move forward in time, everyone knows this, is you press the play button on your time machine, like this. Now let's look at what happened. We selected our strategies we selected our strategies using information that was current as of December 2015. We found a bunch of good strategies, but we didn't have great confidence that the way we selected those strategies would prove predictive of how things would perform in the future. So we tested our theory. Our theory was that by selecting strategies with a Sharpe of greater than 1 and a beta of less than 3, strategies that were returned using that filter would continue to perform well in the future. And actually, our time machine validated that to some degree. Look at our out-of-sample test. The portfolio of the top strategies selected using our filter continued to perform well for quite some time. You can see that it began to degrade over time, but at least in the immediate future, after, say, January 2016, the strategy selection method was viable. You can see here our in-sample and out-of-sample test. In-sample means what happened up until December 2015. And our out-of-sample test includes what happened after December 2015. In fact, our hypothetical returns increased over time. To use the time machine, you can always move backwards and run another test by clicking this button and moving your time back to where you started, and then selecting new filters.
This has been a really cursory introduction to the portfolio time machine on collective2.com. Remember, it is in beta. You know what beta means, right? It means if you see something strange on your screen that you can't explain, just ignore it. Just ignore it. We'll be rolling out some nifty advanced features designed for power users, quants, hedge funds, RIAs, CTAs, ABCs. Anyone who is an advanced user and wants to have a little bit more mathematical rigor applied to the portfolio time machine, iterative bootstrapping and repetitions of filters over time. We'll be rolling that out soon, but you should definitely contact us at Collective 2 if you're interested in experimenting with those features. That means pay us for it. Hope you like this. We'll be back soon.